when I look at the financial system today, I think it's pretty clear that if we have a risk of a crash, it's that we crash up. And I know that sounds crazy, but and I'll tell you why. So the private sector has been very well regulated. We don't have a lot of excess debt. In fact, private sector net worth is a household net worth is around all-time highs.
Yeah, it's a
What's
record. Yeah.
what's different this time around, though, is that the government is basically printing and spending enormous amounts of money. I think of deficit spending, basically you're printing U.S. Treasury securities to buy something. And if
Mhm.
you really think about it, a U.S. Treasury security is basically money that pays interest. Now, if I, for example, wanted to buy a house, I didn't have cash, but I gave you $1 million in U.S. Treasuries, I think you would accept that. Right? It's basically a form of
Mhm.
purchasing power. It's like money. And now the government is basically on an unsustainable path when it comes to deficit spending. They are printing and printing and spending more, and that I think tilts the risks to the upside. Whereas we could have, I think, inflation longer than expected, or at the very least, financial markets go higher than expected. So, I
Yeah,
think this,
I really want to push on that crash up.
yes,
And basically, if I were to dumb it down for the every person, that just means assets
yes,
go up.
assets go up. Yes. So,
Crash up. Yeah. Yep.
well, we can. I think some people call it a crack up boom, where
Oh,
basically you are basically mismanaging the
yeah.
I want it, it's not technically money, but mismanaging the monetary system and
Mhm.
making assets go up. Now, we haven't actually fully gone into this yet because at the moment we still have what many would think of as an independent central bank that is
Right.
pushing against what Congress is doing. But I don't think that's going to last. Now, actually, just rewind a little bit. Now, remember last year, Chair Powell went to Jackson Hole and he gave a speech.
Yeah. Eight
He said
minutes.
that,
I remember.
yeah, it was memorable and it was powerful. He's like,
Yep.
we're gonna basically there will be some pain. I'm gonna hike rates aggressively, and there
Yep.
will be some pain. His mental model, of course, is that interest rates go up, economy goes into recession, and unemployment go up, inflation comes down.
Right.
And fast forward to today, true to his word, rates went up a lot, but then the economy accelerated. All right,
Mhm.
accelerated. GDP print for the last quarter
4
4.9%.
9. Wow.
It's it's like developing country levels. At the
Yeah.
same time, unemployment rate remains very low. So why? It's because even as he was raising rates, we have a 7% fiscal deficit.
Yeah.
The Congress, the government is pushing against the Fed, who is still at the moment still pushing back. So I think going forward, though, ultimately, the Fed is independent within the government, but not of the government.
That's
Ultimately, I
important.
think the
Yeah.
Fed will have to cave to the elected representatives, to the public. And so I'm guessing that they will not be able to uh, be fully independent going forward. And that's when I think you can really have asset prices continue to reflate. We're not there yet, but I think that's the direction that we're heading towards. And
Yeah.
that's more of the risk in my view.